Good evening, everyone. This is Wayne, and this is the video version of the trade report for Monday, May 7th, 2018. Well, we found out Thursday after the close last week that the Oracle of Omaha, Warren Buffett, had purchased 75 million shares of Apple in the first quarter of 2018. This got the bulls charging, and we opened up and went much higher in Friday's session. We also opened up higher in today's session, but got some selling into the close. Stay tuned to find out more. Greetings, everyone, and thank you once again for joining me as I go over the action and activity in the financial markets on this fine Monday. Well, I do have a chart of Apple up here first thing because it kind of transcends everything and anything that's happened over the last couple of trading sessions. Now, if you were listening closely in my intro, you heard me say that the Oracle of Omaha, Warren Buffett, the greatest investor of all time, purchased 75 million shares of Apple stock in the first quarter of this year. Mind-boggling numbers. But he apparently saw the value, decided to invest, and when the markets find out that Warren Buffett has bought something, it absolutely changes sentiment not only in that company and in that stock, but if that stock is a big enough company, which Apple obviously is, it kind of bleeds over into the rest of the market. And the old adage, as goes Apple, so goes the market, kind of came into play here last Friday and to some degree today. But there's also another thing that happened today that I'll bring up in just a little bit. So hang on, hang here with me while I go over this with Apple here real quick, and then I'll show you what else I was looking at today and why we were so bullish and then kind of turned bearish into the close today. So if we take a look at the beginning of this year regarding Apple, very, very volatile, just like everything else. And when the Oracle of Omaha makes a decision to buy something, he buys when there's blood in the streets. So I have no doubt he started accumulating shares in this area right here. You know, somewhere in this area. Now, I'm just making a broad assumption. He never did come out and say what his average price was, and you know, that's none of our business, but I know enough about the previous comments he's made about purchasing positions for his Berkshire Hathaway fund. And that's pretty much what he does. He waits for the most insanity and fear to enter the market, and then for a little bit of stability to re-enter, and then he starts accumulating. He never buys everything all in one fell swoop because, for one, 75 million shares cannot be purchased all in one fell swoop. They must be purchased kind of piecemeal, and you have to register with the SEC, the Securities and Exchange Commission, to buy that much of a quantity. So at any rate, all of this is happening while the rest of the market is, just kind of going crazy. Well, when the market found out about this Thursday after the close, oh my gosh, it just totally turned the tide of what we had looked at the day before in the market. And so this was last Friday, this huge green candle that you see here. And I think Apple went up like $7. I mean, just an amazing move. And of course, it opened up higher today and went higher, but absolutely collapsed into the close. Now, this candlestick here is known as a shooting star, and it basically signifies exhaustion. So it has a bearish overtone to it. Now, whether or not it plays out as a bearish signal, we won't know until tomorrow or the next day. But when a stock goes up like this after a big move and then basically comes all the way back down to virtually where it opened today, that tells the market that there really aren't any more buyers, that all the buyers have, sold. And now we're just kind of sitting there waiting for the next wave of buyers. Oftentimes, however, there is no next wave of buyers, and everyone who got in down in this area, either here on earnings or here or at any point in time during this move on Friday, are going to start taking their profit. So it oftentimes means the distribution cycle is in the making. But again, these are all kind of textbook tenets for this type of a candlestick pattern. And I'm not discounting that it will happen, but the sentiment in the market right now and the sentiment in Apple right now would lead me to believe that we'll go higher tomorrow. Now, what was I mentioning earlier about why I felt the market was going higher in addition to the Apple energy? Crude oil had one heck of a move today, and it really bolted up. Now, there's a few different things happening as it relates to crude oil. Why is crude oil going higher? Well, crude oil being a commodity is really predominantly all about supply and demand. And when OPEC, specifically Saudi Arabia, if you will, comes in and starts talking about wanting to make sure that they keep output at a certain rate and that they're watching the supply and demand equation very closely, and they're trying to get the price of oil high enough so that when they have their initial public offering for their Aramco, I think it's an ETF. Anyway, so it's an initial public offering for an oil ETF. They want to have as much support for it as they possibly can. And of course, the most support that you could ever have for an oil ETF would be the price of oil. And so they are trying to keep it, they're trying to keep it higher without going too high so the market doesn't freak out about it. But you get a situation where you're attempting to control price and things don't always go according to plan, let's say. And when something else comes into the mix, specifically the Iran nuclear deal that Trump has been talking about wanting to exit because he thinks it's one of the worst deals that the U.S. has ever signed on to. And we're looking at the potential for more restricted output in crude oil. That will send the price of oil higher as well. So we kind of had an artificial pop today in oil based on that fear that the U.S. is going to pull out of the nuclear deal. And originally, Trump had said that he was going to he was going to make the announcement whether or not we would stay in the nuclear deal this Friday. He mentioned today that he's going to make the announcement tomorrow. Now, what does that mean? Well, in no way, shape, or form do I know what that means, but Trump has a way of wanting to announce good news sooner than later. So my thinking is that he's going to announce that he was able to negotiate an amazing deal with his European partners in the Iran nuclear deal, and that he was able to get us a much better deal, and that we're staying in it, but we're now going to be benefiting much more. That's my thesis. So I think that the market is going to go higher tomorrow, and I think oil is going to go lower tomorrow. Now, there wasn't a whole lot other than the Apple pop for the market to trade on today. So the market kind of grabbed a hold of crude oil and started moving higher with it. And as soon as crude oil started to get sold, and I will show you what that looked like on a 15-minute chart. Let's go ahead and get that 15-minute chart up here. So you can see that during the regular session, we had we had a little bit of selling at the beginning of the day, and then basically it was all buying after about the first 45 minutes of price action in crude oil. And then the announcement came that Trump was looking at making the announcement tomorrow as it relates to our involvement in the Iran nuclear deal. And the oil just sold like crazy. Now, the oil market settles at 11:30 a.m. Pacific time, which is an hour and a half before the regular stock market session closes. So while the price in crude oil was falling, the price in the U.S. stock market was falling as well. So they were, for all intents and purposes, trading in tandem. And you can see how that's the ES, the S&P futures. And then, of course, over here we have the Nasdaq. Over here's the Dow, and here is the RUT. So the Russell. So every market sold off with oil. This is with oil. So when oil was selling off, it pulled the rest of the market down. And then we got a little stabilization, a little bit of a move back to the upside, which, when the markets react and computer-driven algorithms get involved, we get these exaggerated moves. But in the great scheme of things, we really didn't have a big day as it relates to price action. Relatively speaking, this was a very light day overall. The most action we got was this selling at the end of the day. So right now, I'm in the camp that says, okay, we got a little bit of price action. We got a little bit of an acknowledgement that this could, this announcement that Trump's going to make tomorrow is going to say that we're staying in the nuclear deal, which is going to basically put pressure on oil prices because there'll be more oil available because Iran won't be sanctioned or be cut out of the oil picture, so they'll still be able to pump oil and make it available on the market. So that pushes the prices down. The fact that the rest of the market, the stock market, went down was just a kind of an in sympathy move because there really was, as I said, nothing else for this market to trade on today except the Apple news. So when a market doesn't really have anything to hang its hat on as it relates to movement, it's going to take its lead from a market that is moving due to some type of important news associated with it. I mean, obviously, if Trump says we're staying in the deal and it's all good, that's going to be very bullish for the stock market, even though it will be bearish for the oil market. So we should see some movement up tomorrow in the stock market and some movement down tomorrow in the oil market, if in fact that plays out like I just laid it out. And we'll find out. I don't know. So at any rate, that's kind of a relatively long story about what happened today in the market and why. So Monday played out very, very quietly, which that's fine. We need a quiet day in this market periodically. But let's take a look at the S&P 500. I want to, I'm going to get a daily chart of it up here. They're still in the 15-minute chart of oil here. And this is a 15-minute chart of the S&P, but I'm going to change this to the daily. We want this to be, okay. So, we tested the 200-day moving average, back in February. We tested it several times in this big, patchwork of bearishness where volatility was just kind of pegging. And, we just, tried to get down there and stay down there. We were successful once, or I should say the bears were successful once in staying below, that 200 period, but they failed on all subsequent attempts. And they still kept trying. And they did get below it on Thursday, but then they got bought back up again. And then, of course, like I said, on Friday, we just kind of took off to the upside. So does that mean we're done with the 200-day moving average? No, does not mean that at all. And the fact that we have a bearish Ichimoku cloud here tells me that we could be in for some sideways to lower action over the next week or two, but not necessarily. If there's some sort of salvation move that comes from somewhere in this market, we could rip through this bearish cloud. It is not unheard of to have some sort of impetus in a market, even with bearish energy, that takes the market higher. And what can I say? I'm looking at the market at this point and saying we are still in a range. we are definitely looking at, this kind of, let's go ahead and take this, and we're going to take that from the low there. So we're looking at, this market that has a wedge building, and when a wedge builds, price action becomes extremely tight, but it becomes extremely energetic. So we get this intensity. Now this goes all the way out, this wedge. This goes all the way out into the beginning of June. So, we've got like maybe up to a month worth of, back and forth sideways. That doesn't mean necessarily that's what we're going to get. We could very easily, as I said, get something that takes this market and moves it to the upside. What that would be, I have no idea. We are out of earnings season for all intents and purposes. We've got a market that is quieting down. Volatility is really relaxing, and that's the next chart I want to show you, is the VIX. The VIX actually closed 2 cents lower today. So we are beginning to get more and more relaxation, downside in the VIX, even though we are getting little pops to the upside during the midday trading, because the markets are moving back and forth. But for all intents and purposes, this market feels like it's beginning to settle into its new digs, its new normal, this place where it's resigning itself to this range it's been trading in, and it's perfectly willing to even make that range tighter. So whether or not we actually get any appreciable up action remains to be seen. But if we're to look at strictly the technicals of this market, it looks like we're probably going to be going sideways for the next little while. Now, that's a little bit of a relief for those who are long this market, because it means that we're not necessarily going to go down, but it doesn't necessarily mean that we're going to go up either. But we're only one binary event away from this market having a fairly deep down move or a very big up move. So, we take it a day at a time. We're looking at the market from the standpoint of what happened today and what does that mean for tomorrow. Right now, it is my belief that we will go higher tomorrow. And that's in keeping with what is a very real potential, and in keeping with, what I just said about the way this market is going to be moving, for the next month or so. Now, this is, I'm going to get rid of all these Fibonacci lines here. Kind of makes it a little bit on the, I'm not going to get rid of all of them. I'm going to get rid of some of them. But this is Amazon. As you know, I love looking at Amazon. So this was earnings. I talked about this earnings candle being extremely bearish. I felt as if for sure this gap would be filled, and it tried, but it couldn't do it. And now we've just gone higher. And today was a very nice move in Amazon. We actually closed above 1,600 today in Amazon. We closed at 1,614 cents. That is a very bullish close. That's the first close that I think it's the first close we've had above 1,600. Let me just take a really quick look here. This candle here closed, 1598.39. Yep. So this is the very first time that Apple, oh boy, got Apple on my brain. This is the very first time that Amazon has closed above 1,600. That is extremely bullish. Now, we do have an overhead 100% symmetry resistance, which was at this all-time intraday high at 1620.49. I do expect Amazon to find that tomorrow. And then the first target we have past that is 1654.97. So I believe that it's very possible that Amazon could find this level tomorrow and possibly a little bit beyond, but there will be some natural, this is actually the all-time intraday high, which would be 1638.10. So when and if Apple, it must be Monday, Amazon gets through this 100% symmetry resistance, the next level will be the high of this candle right here. And then once it gets through that, then the 1272 target at 1654.97 is where I'm looking at exiting the position that I put on today. So we'll see if that all plays out. We'll see if it works out. And so I've shown you Apple, Amazon, and the VIX and the S&P, and that's going to be enough for today. I am going to be starting offering more services, and I'm going to be doing it not as a subscription, but I'm going to be doing it as a, I don't know if, there's a service called Patreon. And Patreon is basically a website that was developed by a gentleman who's an artist, but he makes this platform available to those who would like to offer their services to those who are interested in receiving them. It's kind of a clearinghouse for people who have a particular skill, such as myself, with the ability to discern market conditions, directions, and to utilize technical analysis tools to provide information for those interested in receiving it to help them with their trading decisions, trading and investment decisions. So anyway, I will give you more information about that as time goes on, but I'm looking at probably being able to launch, if you will, my space on Patreon this week. And I'd love for you to take a look at it. And it's a very interesting concept. I've just found out about it recently, and it kind of takes the business side of things out of the equation to some degree, and kind of brings the community piece back in. But there's still a transfer of remuneration for services. So anyway, enough said. But for now, I'm going to ask you to please trade safe.